Welcome, welcome. Today is our very first episode of Biz Money Talks with Tracey Bissett. I am your host, a money coach for entrepreneurs. It is absolutely my privilege to take the mystery out of money for entrepreneurs and to bring you special guest experts who can help you with things that you need in your business. So welcome very much. Very pleased to have her here today, Hilda Gan of People Bright Consulting, Inc. So welcome, Hilda.
Thanks for having me, Tracey. I'm pleased to be your inaugural LinkedIn Live performance.
Yeah, it's wonderful. And so for those who don't know Hilda, People Bright Consulting Inc. is an HR management consulting firm known for delivering customized HR solutions. Hilda is also the creator of the Connect with REVUP program designed to help train, coach, and mentor executives, managers, and aspiring leaders to develop their people management skills and create respectful, engaged workplaces. So, Hilda, I'd love it if you can just share a little bit about you, a little bit about People Bright, and then we can jump right into the questions that I've got. We've got an exciting topic for today.
Sure. I am a nurse by profession, but I decided that HR is my passion. And I come by that as a serial entrepreneur. My husband and I actually had an engineering firm that grew to 125 people in 7 offices across Canada. So I am a serial entrepreneur. I started doing management consulting in healthcare, then this engineering, and then some strategic planning. And finally, I really love the human resources side of the business. And that's what I've decided to start about 4 years ago now.
Excellent. And I know that you talk about RevUp. I know that it is your creation and you've almost spent your life's work coming to this point where RevUp is actually out into the world. And so I'd love it if you can tell us a little bit more about that. And I know that while it is a term that you use and it's the name of your program, what it stands for and what it means to you.
Sure. What I mentioned briefly that my husband and I had an engineering company, and we wanted to make it special. We wanted people to feel they were professionally challenged at work and that they were growing and that they loved coming to work. I mean, who wouldn't want that? A place where you loved what you do and you love where you work. So we had some ideas and we created this foundation, and we found that we wanted to find out what others thought about it. Our staff and us thought we had a great thing going. We became one of the best workplaces in Canada, top 10 twice, and that was in our 10th year. We were so excited that we were validated for what we do. And so fast forward, a couple of businesses later, and I thought, of all the things I ever loved to do, it was really helping people. And what was the success that we had? Why did we create this best workplaces? And I couldn't articulate it in less than 3 sentences before, but I came up with this epiphany that rev up your company. What energetic thing is that? But rev up is more than just a buzzword of energy. It stands for an acronym of principles that if you follow them, you will create that recipe that we had at iTrans. So rev up stands for treat people with respect. Look at them as equals. Value who they are. So that's your acknowledgement piece of people. Then the U stands for look at the uniqueness that each of us brings to our workplace and tap into that potential. Imagine what you could do if you treated people with these respect, equality, and value, but you looked at who they were and you really raised and uplifted their capabilities. Don't you think they would feel loyalty? Don't you think they would enjoy what they do? And so the secret sauce of what we did at iTrans was this concept called RevUp. We didn't know it at the time, but this is the way I can articulate it easily to people, that if you take a RevUp approach, you can make a difference to the lives of the people that you work with, to your team and your company. Because statistics show is that when you invest in people and you make them feel engaged, you actually have 2 times more profit and 2 times more sales than your counterparts who don't involve people and care about those people.
Excellent. And I love that. And that's all to set the stage for what we're going to talk about today. And I am by no means an HR expert, and that's why Hilda is here. But I am an expert around money. And one of the things that I know to be true is that we have to make sure that in our businesses, we're having important money conversations with our stakeholders. So whether it be our bookkeeper, our banker, our accountant, our suppliers, our clients, our employees, it's all absolutely critical. And we need to keep those conversations very issue focused. We don't want to bring up all our insecurities as an entrepreneur, as a business owner. And last week I was running a complimentary training, our financial foundation to entrepreneurial peace, our biz peace training. And an important topic came up and people were asking questions around, and it was, how do we have those conversations with our employees? And so from that stemmed today's conversation. And so, Hilda, I'm going to ask you a few questions. Number one, just a level set for those who are joining us. So I know we have a couple people live watching us. There'll be people watching us on the replay, but just so we can talk about things from the same perspective. Can you tell us what's the difference between contractors and employees and how we pay them and what's different around that?
And by contractors, we don't mean employees who are on contract. Because I think sometimes
independent
say,
contractor.
I said, are they independent or are they on a contract with you? Okay,
independent contractor, not on a contract with us.
Right. So employees are people who you pay. They're your staff. They are supervised by you. You tell them what to do, how to do it, when to do it. Not micromanaging, but you give them, hey, we need you to do this using our REVUP method of doing this, and you need to do it by such and such a date. So that's clearly one thing. And then you pay them. You pay them compensation, you pay them a salary or hourly, and you follow the employment standard guidelines. They are your employee. An independent contractor is not your employee. You may have a relationship with them where you say, we want you to deliver such and such on June the 1st. How they do it, you don't tell them necessarily how to do it because they are independent. So they deliver the outcome. The how to is not what they do. Whereas the employee, the how to, you have that ability to guide, dictate, or whatever. And dictate's not a good word, so forget that word. Guide.
Prescribe.
Okay. The other thing is that an employee works for you, only you. I mean, they may have part-time jobs, but when they're employed by you, they're paid. An independent contractor should have a clients, more than one. And if they are the only one, it might smell like an employee to an auditor. So number one, they dictate what they do, but they deliver for you. They have more than one employee. And so they bill you. And don't pay them every 2 weeks. Like some people pay
you send them an invoice. If I'm your independent contractor, at the prearranged periods, I'm going to send you an invoice and you're going to pay me. I'm going to charge you tax as appropriate because I have my own business and need to look after that. So I'm invoicing you if I'm an independent contractor. What does compensation look like for the employees, the people who work for us as part of our team?
I would just add one other thing is that you do not pay them like an employee. You do not pay them at the 15th and the 30th of the month for that invoice, right? They issue that invoice. You pay them when you get paid by your client. So they have a risk to bear.
Depending on the arrangement that you've set up with them in advance.
So the question that you asked, because I wanted to make that clear to people that you don't treat them like an employee. Definitely not.
And so in terms of compensation that an employee receives, there's, as you mentioned, salary, but there's more that goes into being an employee that you receive in terms of benefits, right?
So you do have to follow the employment standards for whatever province you reside in. And that would include statutory holidays, any leaves that particular jurisdiction has, or federally if it's federal jurisdiction. Then you also look at benefits. So some companies will give you group benefits and they will pay a portion of that or not. So these are the additional perks. Some companies, because they sell a product, may offer that at a discounted rate. All the free coffee that you drink while you're on duty, and 5% off, bulk buying of any of the food or something like that. So, and then if you work for the airlines, you get a free travel, standby, those kinds of things. So that's also part of some of the perks that the company will provide you.
Okay. And so whether we're independent contractor, and probably we should split it so we don't create confusion. So first of all, with our employees, let's start there. When and how should we be having compensation discussions with our employees?
I think it's important as the business owner that you identify a set of guidelines, a procedure, or a process. So typically, people would say on an annual basis, we determine the salary increases. Do that based on the year end and when you get the results of the year end. So if your year end
Your company's year end, right?
Yes, your company year end. So I'm not going to choose December because some people do that. But let's say your year end is June. By the time you finish closing your books, getting it processed, and the information from your accountant, it could be 3 months or 6 months, depending on the size of your business. And then you say, you'll know at that period what kind of bonus you might give, what kind of increase you might give for the next year. So I would set that to tied into your fiscal bookkeeping accounting arrangement, and then do it annually. Don't do it sporadically because you'll have people coming at all hours and times of the year. You may, though, when you hire somebody, say, I know I can't afford to pay you, but if you prove that you can do this job, I will give you a $2 raise, or a $5,000 raise, or a bonus at 6 months. And that's put specifically into the contract on hire. But other than that, I would recommend only annually, and that you do it. And when you do it, put it in writing and give them a letter, file it in their employees' file. Because when you all of a sudden have to lay off and people don't have any records, not even the start date, that's crazy. That's crazy.
Well, that's really wonderful because you've talked about when we should be doing it, how we set the expectations with our employees, and how to document it, which is extremely important. And that helps them know that you take it seriously because, yes, I've made a commitment to you, I've put it in writing, and we're going to do that. And then ultimately what goes with that is following up on that action, making sure you're having that conversation, right?
And if I could just give some ideas on the rationale that you give for a salary increase. So you may have identified criteria. It could be profit driven. It could be, if they're a salesperson, sales, or other parameters. So those are identified. That's an individual thing or a company thing. You also need to look at the economics. What is happening out there? If it's going to be a terrible year, you anticipate it, you're going to keep your increase low. You're going to look at your industry. What is your industry offering right now? What is the economy like? So there are internal forces and there are external forces when you make that decision. And if you have enough staff, you may end up having to have standards, bands if you want, so that if they're a novice finance person, or if they've got 2 to 3 years experience, or are they an associate or a project manager, each one of these should have ranges within them so that you're not kind of doing it by whim or favoritism. It's got to look like it's a fair process.
Yeah, and that's going to help you, and it's going to be easier to have those conversations, I would imagine, if we have an objective process that we follow.
Exactly.
Which is critical. And what you were talking about, looking outside the organization, like I know when I was employee of TD Bank, they would call it a industry or competitive survey of compensation at same job level, all of those kinds of things. Now, specifically, if we have salespeople and we may not just pay them a salary, what's the best way to pay salespeople who actually get paid and compensated based on their results? How would we structure that?
There are different models, and I think you need to think about how easy it is in this particular industry to compensate. But I think there's usually, the best thing is a combination of some salary, a base salary, and then a percentage of their sales for what they do. So then they realize that it's not it's not capped. But think about, like, don't think about, oh my God, I have to give them this money. If they come forward and you give them 3% of that sale, they got the sale, right? So paying 3%, 10% doesn't seem like a lot.
No, everything lifts because everything's
good,
going stronger.
So you have to think about it that way. Let's have a win-win situation here. So you can do the numbers and calculate later, but I think that's the best combination. Some people, particularly top sales performers, say, no, I don't need a base salary. I will make this happen. And I want commission, but then they want maybe 3 times more commission or 2 times more commission. And let them put their money where their mouth is. I think one of the things we didn't do enough of as we were growing our companies, we wanted to help people. We wanted to keep our costs down. So we'd hire these people who say, hey, I can do it, I can do it, I can do it, and I'll do it for less. And they really didn't do it, right? It took them 6 months to get going. And then when they got going, I had one senior project manager who he was making $100,000. Guess what his sales was? $100,000 in a friggin' year. Sorry. And the thing is that, we brought on people to support him and he didn't even pay his way. He barely paid his way. So sometimes it's better to have people who are proven track record and they'll help you grow faster than the thing. Well, if they can do it, this is great. And I saved myself some money. But in the end, you didn't save yourself money. You lost money because if you'd had a proven star maker, you would have had income to pay for that extra money that you thought, I can't afford $20,000 more.
Excellent. And when we're working with an independent contractor, we're making all those arrangements up front and then we're putting it in writing. And we may have in that contract specified periods where we revisit, or we may not, maybe on a contract renewal. So I think that's a little bit more straightforward. What I'd love to say, thanks, Martin. We have Martin watching us.
Hi.
Love to jump in now and talk about the beauty of having that compensation where you've got the split between maybe the base and the commission, whether it's a sales role or something else, but where it's paid on performance. I imagine it creates more buy-in with the organization. It allows people to participate in an unlimited upside, or you've capped it in such a way that all of you are agreeable. And so that really aligns interests, I would imagine.
It certainly does. And I think for salespeople, that's the way they want to go. For the regular staff who are not in the sales mode, sometimes shares, but it costs a lot of money to set up a share arrangement. But when you do that, you do have buy-in. But I know that when I was explaining it to our staff who were now eligible, they had to work for 2 years with the company and they had to look like they were vested, engaged, and we would offer it to them. I felt like I was trying to sell them something like snake oil. like I guess I'm not a salesy person at that time. And so, but we had a great product and it was amazing. By the time we sold our business, I think we had almost 45, 50 shareholders, and we had 125 people, and then not everybody was eligible. So it was really good. But we had to get sign off. Every shareholder had to say, we are saying, yes, this company can be sold, like a scary moment. But they trusted us because we built that relationship. We built that relationship of honesty and trust. And I think some of the questions you have will help you understand how you do that. To give information financially, there has to be an element of trust there. And I can give more tips and strategies about that shortly.
So I've worked with entrepreneurs, certainly in my financial coaching business, where we're working through cash flow forecasts, we're analyzing their financial results, where I've had entrepreneurs tell me that all of a sudden things start to trend well. And all of a sudden these frequent, regular requests for raises come in from their employees, even from people who are on a longer term contract, that's their only job, where they won't technically be employee. And so sometimes people can get hungry. They start to see the success of the business. They want more than perhaps their share. And I want to put that out there because as business owners, it's really important to protect ourselves. When you start a business, you are taking a lot of risk. You're usually going without compensation for a while, and you're the one bearing the risk of bringing in basically business and starting this thing from scratch. But how should we handle it if our employees are coming at us repeatedly for requests for raises? have I done something wrong if that's happening to me? And just generally, how should we handle that, Hilda? Do you have any advice?
Yes, thank you for asking that question, because I think part of it is going back to that process. If you have a process, that's something that people need to follow. I think if somebody is really doing well and a star performer and you feel you can justify it, then you might want to flex your rules, because you write rules, but they aren't meant to be rules. They're meant to be guidelines. And so you can be flexible. But if you have everybody coming, then there's something of concern. So having a process certainly helps that. The other thing is what I'll call drip. Just drip a little bit of information to educate your staff over time. I know that sometimes people all of a sudden get wind. I'm getting paid $20 an hour. Oh my God, they're charging $75 an hour for my service. I should get at least half of that, if not 60%. And so
Yeah.
the steady drip is educating your staff that $20 doesn't mean I should only charge $35. 75 is because I've got fixed costs like the rent, like the computers that we keep,
Insurance
leasing,
for you and
insurance.
our practice.
And then there's variable costs. Oh, we're having a big program. Let's put away some money for marketing for this. And so all of a sudden the marketing goes up 2 times in the next quarter than it was before. So a business owner, a business has to understand all of those costs. So typically, in service sectors, that markup is anywhere from 2 to 4 or 5 times that salary. Right. So just because you're getting $20 an hour and they're charging 75, it's because they have to do the marketing. They're not going to get business for you to keep you gainfully employed every day of the week. And so some companies will say, ideally we like to be at 87-95% productivity, which I always found hard to understand, because by the time you take away sick time and stats, they're running 110% productivity. So my husband and I used to banter about that. I said, but you don't understand. It can be 100% productive because you got stat holidays and sick time.
Absolutely.
and training. So I think when you going back to my RevUp concept, when you apply a RevUp approach, you are creating a relationship with your staff, with your colleagues, with your clients of trust and of understanding who they are as individuals. Because remember, you're looking at their uniqueness and creating that relationship. So when these tough conversations come, my tip is, first of all, listen and hear what they say, but then help them understand where your situation is. So again, that little bit of dripping earlier helps them understand a bit about the business of running a business, and then trusting you. I have a good example of when we were during the 2009 recession. We were running a business, and people were starting to economically shut down, like businesses, and we might be looking at closing our St. Catharines office. So my husband, it's communication, right? It's trusting people, creating relationships, being open and honest. So we drove out to St. Catharines. We announced that we might have to shut. We are not in that situation, but we wanted to share this with you. So we had a general staff meeting with the group, and then each one of us broke up into one-on-ones with all the staff there. And I remember talking to one person, and he had 2 10-month-old twins at home. And he was a sole breadwinner, because with twins, the wife is really not able to work, or you're going to be paying somebody to take care of your kids while your wife's working, and maybe it's not quite cost effective. So I shared with him, and I said, when do you want me to update you? When will be the right time? And what he said to me, I still get emotions when I share this example. He said, Hilda, you know me. I trust you to know when the right time is to come and tell me. And what that meant was, you and your husband have created a work environment where people trust each other, and they trust you as the management to know them enough to understand when is the right decision. So when you create relationships, because we all have that power to uplift our staff, to create relationships, so that when you're having those awkward, difficult conversations, they're not quite as awkward as when you've created this kind of stance, us versus them. You're going to get those terrible things. So start with listening, hear what they say, build that trust over time. I mean, how many days have you had that opportunity to connect with that person, to know a little bit more about them? And if you're not good at remembering, put it in their contact. I mean, I have my contact list. And so I'll say, they've got 3 kids, John, Samantha, and I'll put the years they were born, so I know that they're 9 or 10, and when their birthday is and stuff. So little things really make a difference. And so it makes those awkward conversations a little bit more, give you the benefit of the doubt, right? So that's
excellent. And
my advice.
And like you were saying, there's probably other things that can be done that people value, not in place of funds, but they may value the compliments. Maybe it's team building activities and knowing your staff and what would be important to them. So not to rain on Hilda's beautiful example of trust and that wonderful conversation. Given my experience as a former executive in a big bank, in TD Bank, one of Canada's big 5 and huge across the Eastern Seaboard in the US, I know that when people get backed into a corner when it comes to money and they feel that they have been wronged or they're under the gun, well, no matter what the situation, they will react in ways that we cannot predict. It will be like a different person sometimes shows up in front of us. I've seen that in cases. The same time around when you were talking about potentially closing that office, as companies were in dire straits and their businesses were closing and loans were being called and what was happening even happens on the personal side, people will react in ways that you can't imagine when money's involved.
Yeah.
So as a business owner, my tip from the financial side is to use discretion, know who you can trust and who you can't, with how much you share about your financial results. Absolutely, if there is going to be something serious impacting the workplace, follow Hilda's lead around being transparent and sharing what you can. Sometimes it's not about sharing the full income statement that shows our sales and our expenses and our profit. Maybe it's about sharing sales numbers so that people can align their goals with those, or we can track how we're progressing. But the level of transparency that you reveal on your financial position is going to be individual to each business owner. You're going to know your own staff, but be prepared for people to potentially respond in ways that you didn't expect.
And so when they start to yell at you, okay, let's face it, some people will say you and make really things. Acknowledge the feeling. I know you're upset, and I understand that. I know that this is going to impact you. If we close, this is going to impact you. But then also be honest. Figure out what your stance is. If you're not going to bend, you can't bend because you're shutting down the place. Let's say, then you say, I know it's going to impact you, and I feel for you. If you need to do something and it is for the greater good, then you have to share that. You say, I know this is impacting you, but I've had to make the tough decision. I've had to let 5 people go, and I need to think about the future of this company and what is in the best interest. And I'm sorry that I've had to make this tough decision, and it is you. And if they scream and yell at you more, I understand that you're upset and that you're yelling, but I would appreciate that you keep, you tone it down a little bit, because I think this conversation needs to be respectful. So no matter who it's coming from, neither of us should be yelling at each other. So I would ask you to just, let's just take 3 breaths in, both of us, and then let's carry on this conversation in a respectful tone.
And even pick it up later if everybody needs a chance to cool off.
So try to be that leader and de-escalate. Acknowledge it. And if they're yelling at you, just say, I understand why you're yelling, but this is not a good thing to do. Let us both agree that we need to be respectful. So do you want to take 3 breaths? Do you want to take a break, and we'll resume this later? De-escalate that situation. So I don't want it all sound like, oh, it's lovey-dovey here.
I'm going to give you another scenario.
I want you to have that opportunity to also deal with those very tough tough discussions. And so that's my tip for you.
So here's another one, Hilda, and I want to wrap it up shortly, but I do have this other scenario for you. I've worked my butt off. I have my company. I've been doing it for 10 years. We're finally like making lots of cash flow. I pay my team fairly. It's in line with industry standards. I pull up in my sports car. I take my 6 weeks of vacation to these beautiful destinations every year as business owner. And now I've got people on my case about why don't they get more? Why am I getting all that? Why don't they get more? How might we handle that kind of situation?
You would have to say the fancy car. Like I tell you, this, like that optics is pretty hard to do.
Is it though? Like, because it's my business and I've taken a lot of risks to get here in my imaginary situation.
I know,
and
in your imaginary situation, it would
and
have
I'm
been
paying them
easier.
fairly according to the market survey. They get bonuses. They get lots of perks. Like from all HR accounts, everything is nicely taken care of. I communicated. I've got a great process in place. There's still going to be people who want more, right?
Yeah, yeah. I think you don't have to over explain yourself, but again, this is where the drip method helps a little bit over time to help them understand and to help them realize that, you know, I understand, and if they throw the fancy car, I understand you see optics, but what you don't see behind the scenes is the number of years that I worked without salary to make this a success, and it is a success now. And that fancy red car that you see out there is my treat for the 10 years before this of struggling to make this happen. So if it looks like I'm cushioning it, like I'm having a great time, this is my thing to myself. But I know that I'm giving a fair salary, you know, and I I don't I don't expect you to understand everything, but I want you to understand that as a company, this is the belief that I stand for. And then you talk about all the things you said.
Yeah.
You know, I've treated you fairly. I've built this. This is my perk. And if you want to just narrow in on that, I don't think that's not giving me just credit for all that I've done behind the scenes to
and
make
the risks taken and all of that. And it's also, I would phrase it as well from a financial standpoint. That's a symbol outwardly that you can see, and everyone gets to make choices with their funds as they decide. You as an employee get to decide what you do. And so let's focus. And then I guess if they're going to keep at it, if say they're going to be on your case every week about the car, then it might get to a point where you might need to part ways no matter how great they are.
Exactly. And you have to be prepared for that. You should not, I mean, sometimes people would leave, you know, and they found another job offer. And your instant reaction is, I can't lose this person. Let's match the salary. And maybe that's sort of what they wanted. They really wanted to say, but they wanted up the salary. You're going to have to make that business decision. Is this person worth keeping? Or do you need to look elsewhere? Because sometimes you have to let people go to let them grow and be something, because they might come back to you. And we've had staff come back later on with 2 more 3 years experience. And now they're a senior level person who can really bring in sales and business and know how to talk nicely to people because they've been on the other side. So there is a benefit. So you sometimes part ways, but make that parting an open door return, as opposed to, okay, well, you're leaving. We have nothing more to do with you.
Get the heck
You can
out of
sit out
here.
your 2 weeks, but we're not talking to you, right? So I urge you to make that business decision. Do you match the salary? You don't have to. And then keep the doors open regardless of what happens. But sometimes you'll have to say, I understand you want to make more money and you need to make more money, but that's not something that I can do here. So, you know, I respect your choice and your decision, and maybe you need to do this for financial reasons at home, but I can't do that. You know, so show them how fair you are, show them, as Tracey said, but in the end, it's their decision. Yes. And you can educate them. When we sold our business, the amount of money that was owed to us, you could have bought a house out of. So you know, as much as we had our vacations and
just as shareholder loan, not as the purchase.
Yeah, as a shareholder loan, we kept loaning money back to the company to invest in it. And so when they closed out the books, they owed us the equivalent of a house just to pay off the loan that we had. So it does look cushy that we set our hours and we can drive fancy cars or take vacations.
Whatever it may be, yeah.
But I have the utmost respect for business owners because they're willing to do something they're passionate about and not make a salary. We had one guest on my REVUP Your podcast, REVUP Your Potential podcast. He said that he paid his mortgage in before he started a business, and over the next 10 years he remortgaged his house 7 different times. He didn't pay himself for 2 years, and he just did it for passion and love, and you invest in the company. So when you see that person with that fancy red car, it's the thing that they've done to thank themselves for all that they've done to become the success and the struggles that they've had to do it.
And we won't dive into it, but on the flip side, as well as if things are really cash flow strained, we also want to be careful about how much we're sharing, because we don't want everyone to be in a panic every day about the state of their job. If we think there's a possibility we might be laying off people, we want to talk about it, but we want to temper the really good and the really bad so that we can keep communication open, and as Hilda suggested, that drip approach so that we can keep informing people, as well as when we're having money conversations with any of our stakeholders, including our employees, we want to keep them issue focused, keep them on the aspect at hand, not about our insecurities as an owner, operator, business owner, and not on their personality or anything like that. Keep it on the issue. And I think that showing respect and treating everyone well will certainly stand behind all of that.
I think it's all in the way you communicate it and manage expectations. Do you have time for one anecdote, tiny anecdote?
Quick one, yes.
Okay, so during that time of the 2008, 2009 recession, we knew our bonuses was not going to be what it was in previous years. We sent out information to educate our staff, and we put it in the letter for their bonuses. And the feedback we got was, that was better than we thought. I thought it was going to get less. So we communicated effectively, we managed expectations, and they were happy that they got what they got. So
yeah, and they would have been hearing in the news that other companies were shuttering completely, canceling all bonuses. So the fact that they got one and it was better than you had laid the expectations for, that's all fantastic, Hilda. So before I let you go, I would love to know if you have any final tips around having money conversations with our teams. It can be something new that you want to raise or something you want to reiterate, just so that we can take it as our takeaway as we leave this conversation and we keep it top of mind.
I think we've covered things, but I would just reiterate, you need to figure out how you share and what you share with your staff, but share enough so that they build a trusting relationship with you, because that, I think, is the key. And if you have staff meetings, use that as a way of educating them how money works, like how you run a business. The $20 versus the $75 is a good example, but just those little drips can be done as an education piece at your staff meetings.
Excellent. And so before I let you go, what are you working on now? And now that people have got to know you a little bit through our conversation, how can they learn more about you and People Bright?
So, I as you can tell, I have a lot of knowledge about business and human resources, and I really want to help companies build the best version of themselves. And that's, to me, starts with an HR foundation and really building that. So I have a thing called an HR Checkup, and people can take my HR Checkup to really see what they need to do. People can contact me through my website, www.peoplebrightconsulting.com, and they can look me up in LinkedIn. My LinkedIn profile is Hilda Gan, so it just ends in Hilda Gan. There's no funny numbers behind it, so feel free to look me up there too.
And I will, after we wrap up, I will drop all of those links in the comment fields on the respective platforms so people can find them. And certainly this interview is going to be loaded to our YouTube channel so that you can check it out there, and we'll have all of those details in that information. Well, thank you so much, Hilda. I have so much appreciated your knowledge. We started from this place of having this money conversations with stakeholders, and you've been able to shed so much light to educate us around the difference between those employees versus those who may be on a long-term contract with us versus independent contractors, how, when, and what processes we should set up around the compensation and how to frame those discussions. And then if we do get into those challenging money conversations, how we should best proceed with them. And so, wealth of experience as always. So thank you so much, Hilda, for joining us.
Well, thank you for having me, Tracey. Really appreciated it, and giving some of my little tips and strategies that have helped me, and hopefully that will help others.
I'm sure they absolutely will. So before we let you go today, a couple of things I want to let people know of. Number one, we have a weekly community where business owners can come together and have conversations about money. It is our Biz Money Club. So bizmoneyclub.com. You can get registered. It is a drop-in every week. So you come when you can make it. If you can't make it that week, you join us and catch up another week. And it is really just open discussion, so you can have community and talk about things that are happening in your business and get insight from others, as well as from me. We do have a next round of Financial Foundation to Entrepreneurial Peace training coming up in June. And so I'll drop the link for you. It's bizpeace.com. We'll put that in the comments section, and we would love to see people there, so we can keep this education going around financial fitness and helping you step into your power as the leader of the organization and use your numbers and your cash flow to drive your business and hit your results. So thank you so much. We will see you again with another session of Biz Money Talks. Have a great day.
Bye.